Welcome back, guys. We are back with another video. Today, I'm diving straight in to talk about the big picture and why you should be investing in DeFi in 2025. As always, if you enjoy the content, please make sure to smash that thumbs up button below. Hit subscribe. Over 30% of you watching this video are not even subscribed to the channel, so make sure to subscribe below and let's get straight into it. Okay, so like I said, guys, today's video, we're talking about the big picture. Why should you be investing in DeFi in 2025? Ultimately, for me, this comes back to being self-sovereign over my own capital and putting my funds and my money to work for me. Ultimately, the banking system and fiat currency has not served the vast majority of the population over the past number of decades. And I'm showing this M2 money supply chart for the United States only just to illustrate the point here that money printing has gotten out of control. Over 1/4 of all US dollars in circulation have been printed since 2020. What does that mean? That means you're seeing a 44% increase in the supply, the circulating supply of US dollars over the past 5 years. The US dollar has lost more than 25% of its purchasing power since 2020, meaning $1 in 2020 is now worth only 75 cents, if even here in 2025. And so the continued debasement of the US dollar and fiat currency in general is only going to continue as this chart keeps moving up and to the right here. It's been a story as old as time, and we can see, zooming out on the chart, going all the way back to the 60s and 70s on the chart, this is nothing new. But what you're noticing is the chart is going even more parabolic here over the past 5 to 15 years, and it's not slowing down. Again, what happens here is as fiat currency continues to debase, your purchasing power is getting worse and worse. And if you're not doing something about it by investing in Bitcoin, by investing in crypto, and putting your money to work in DeFi, you are getting left behind. That is exactly what we get into in the UIG, in the Fast Track program, helping clients generate consistent cash flow, putting your money to work, becoming self-sovereign, self-custodying your assets, and generating consistent yield day over day, week over week, and month over month. So that big picture is super important to understand because you're lucky if you're getting somewhere between 1 and even 4% on the very high side from a high interest savings account with your traditional bank. Whereas in DeFi, we are able to get 6, 7, 8% on those stablecoins, and even strategies doing 15 to 30% on stablecoins in this DeFi market. We're going to show you a couple of quick examples here, but that is the power of what you're able to do. Remember, the banks have been doing this for decades. They're using a fractional reserve banking system where they're lending out your money 10 times over and getting huge amounts of interest from doing it and passing on pretty much zero of those gains to you as a retail bank user. So this is a new era of self-sovereignty, a new era of you being able to take back control over your own financial independence and putting your money to work for you. Okay, bringing up DeFi Llama very, very quickly, we can see the trend here. We had a super high run up in 2021 with everything happening in decentralized finance. This was the birth, really, in the last cycle of everything that happened on Ethereum and subsequently Solana with DeFi. And over the past few years, we've seen that beginning to ramp up again. Of course, this was like the first testing ground. A lot of protocols being tested. Some things went wrong. We had a pullback and we had a bear market, but we've been steadily moving up and to the right here since middle of 2023. And you're seeing much more sophisticated DeFi protocols coming on the market over the past couple of years that are helping us to continue to increase the amount of total value locked in all of DeFi. We're sitting at around $140 billion in TVL in all of DeFi at the time that I'm making this video. But I'm just illustrating the point that we're seeing a nice, steady, gradual raise here. Yes, there's always going to be ups and downs on the way, but you have the control and the power to put your money to work for you in decentralized finance. Now, we have got dozens of different strategies that we use in the UIG and in the Fast Track program with our clients to go into very great detail with interest rate arbitrage, delta neutral strategies, delta hedging. All of that good stuff is going to be part of your journey further down the line. But if you're in the early stages of understanding DeFi and wondering how you can make your money work for you, the easiest thing you can do is treat DeFi as a savings account or a saving mechanism for your capital. I'm going to show a couple of quick examples here. Revert Finance, a protocol we've referenced many different times on the channel here for being able to use and deploy liquidity into different pools. But you can simply put your stablecoins to work here for you on Revert simply by lending USDC across different networks like Arbitrum and Base. You're earning 8.65%, 9.37% simply from lending your stablecoins out to other investors and other traders who are paying interest to borrow that capital. This is an extremely low risk approach to generating consistent yield. And best of luck finding a traditional bank that's paying you 8 to 10% yield on your coins or on your traditional US dollar fiat currency every single year. So this is step number one. The very basics of DeFi is understanding that at a super simple level, you can take your capital, your US dollars, turn them into stable coins and generate 8 to 10% yield on the low end here for being able to have that capital lent out to people who are borrowing it and subsequently paying you interest. This APY is not coming out of thin air. There's genuine demand for stable coins in the market. People are borrowing and paying interest on that. You're becoming the bank by lending them that capital and you're earning that consistent interest over time. Couple of other examples. We can take that to another level here. I'm executing a strategy with stablecoins over on Jupiter Lend. This is a multiply strategy where we're basically executing interest rate arbitrage with different stablecoin pairs. I'm supplying Syrup USDC, which is paying me a bit over 6.1% on the supply side, and I'm borrowing USDC to lever up my exposure to Syrup USDC. The difference here in the supply rate versus the borrow rate is the interest rate arbitrage I'm taking advantage of. And you can see I'm earning 18.5% on this stablecoin strategy from executing and benefiting from the interest rate arbitrage between the supply side and the borrow side. Okay, so step number one is simply supplying stablecoins and earning yield. Step number two, we're taking that a step further, is using interest rate arbitrage strategies, just like the one I'm showing you on the screen here, to earn 18+% on stable coins in the world of DeFi. Again, give me another example from traditional finance where you can earn 18.5% on stablecoins over a consistent period of time. And I don't think you'll be able to do it. So this is a phenomenal opportunity to be able to provide capital, generate yield from the interest rate arbitrage between different stablecoins. And again, a very low risk approach here. You're not taking on huge amounts of directional exposure to Bitcoin, Ethereum, and many of these other assets. Although they are strategies we teach in the program, I'm giving you the super basic fundamentals of just what you can be doing with stablecoins alone in the world of DeFi. And that's why you should be tiptoeing into DeFi here in 2025, because imagine where these numbers get to by 10 years from now. Imagine where we get to by 2030. We're at $137 billion here in DeFi. I think this goes to $1 trillion by the year 2030. I think by the time we get to 2035, could we be at 1.5 or 2 trillion? I think it's very, very possible. And so we're going to see exponential growth here over the coming years. You have the United States Treasury Secretary Scott Bessent pushing stablecoins as a new big narrative in the US government, and the adoption of stablecoins and the growth of stablecoins from institutions. Many of these large corporations, Stripe creating their own stablecoins, PayPal creating their own stablecoins. The entire DeFi industry is only going to grow, and there is ample opportunities to be generating very consistent yields even with just stablecoins, like I mentioned a couple of moments ago. Again, another quick example I want to share is being able to put your stablecoins to work on these perp dexes. You have the ability to be acting as the counterparty, once again, supplying and lending stablecoins on perp dexes like Lighter, Hyperliquid, Avantis, EdgeX. You're earning 43% APR on your stablecoins in this Lighter liquidity provider pool, which is effectively acting as the counterparty and the capital that all of the perp traders on Lighter are tapping into when creating long and short leveraged positions. Okay, 43% on your stablecoins in this vault and the Lighter liquidity pool is just one example of many where, again, you're not taking on directional exposure to the market. You're putting your stablecoins to work for you and you're generating super consistent yield. At the time of recording this video, we are seeing a bit of a pullback in the market. Bitcoin is priced at $100,000, right now, but you're still able to generate super consistent yields with these stablecoin vaults. That is the beauty of removing the directional risk, generating phenomenal yields on stablecoins in DeFi, and taking your income to the next level. Again, becoming self sovereign, taking control of your financial future for you, your family, your loved ones. This is what decentralized finance and DeFi is all about. So that is why I think it's so important. You should be investing in DeFi here in 2025. You might be a beginner, you might be more intermediate. There's always something to learn. We are on the bleeding edge of everything happening in this space. So make sure to check out the links in the description for the UIG, for the fast track program. You have a community, you have help to get you started on this journey. Check out the links below, and I'll catch you in the next one.